We believe that wealth is a journey and that this is your jumpstart to trading success. Hello, everybody, and welcome back to the Trader's Mindchat show. I am joined, of course, by our lovely Melissa. And today we have a very, very special guest joining us today, Richard Moglen. You likely have heard him all over financial social media and all the places. I am super impressed with what Richard has put together in just two short years. Here's some of what is on this man's resume. Over 300 YouTube videos, pure fire content. Go check it out. He's interviewed some of the top names in the industry, many U.S. investing U.S. and champions, including Leif Soreide, including Mark Minervini, including Oliver Kell, and a number of others. He also just finished hosting the two-day stock conference by Trader Lion, and geez, what does this man hasn't done? It's absolutely incredible. Richard, appreciate you taking the time and joining us here today.
Oh, thanks so much for having me, both Michael and Melissa. It's great to have to be on the show. I've watched a few of them previously. Always a fan of the Jim Ropel interviews. I thought you did a great job as well with that. And yeah, thanks for inviting me.
Absolutely. So the way that it's going to work, we're going to have a little bit of a interview here, but
Sure.
Melissa's going to do the Q&A at the end. So everybody that's here, that's joining us live, please go ahead, type your questions in, and then we'll get to the questions and do a full-on Q&A at the end. But Richard, yeah, I'd love to hear a little bit more about your background and to start to hear to hear about why you do what you do. Like, well, what got you into publishing all this great stuff? And
Sure. Yeah.
go ahead.
Yeah. So basically, it all started back when I was going to the University of Maryland, and my major is actually mechanical engineering, so not finance related at all. But basically, what happened is I had heard about through the forums there when everybody's looking for classes, there's forums floating around and reviews and all of that, and I heard about this fantastic class called an Introduction to Investing in the Stock Market, taught by Dr. Eric Wish. And the reviews were off the charts. People were saying this changed their lives. It was the best class they had ever taken. And I had a free slot, and I decided to learn more about it. I was interested in investing, but I knew nothing. I didn't know what an ETF stood for. I didn't know what the SPY was. I didn't know how to trade at all, what a brokerage was. So I was completely new. But basically, I decided to take this class, and starting from the first day, I think I took more notes that first day than I have in like all my engineering classes in a week. That first week of school. So. Dr. Wish is an incredible teacher. He's on Twitter at Wishing Wealth, and he was also just a presenter at the conference I just hosted that Michael mentioned, the Traderline 2-day conference. We had a ton of fantastic speakers. So if you haven't checked that out, it's a really great resource in my opinion. But he gave a kick-ass presentation, and yeah, that class was basically a crash course in investing, Roth IRAs, financial literacy, and Dr. Wish's style is canned slim base. He's been doing that for over 50 years, part time. Super knowledgeable guy, friends with Mark Minervini, went to his seminar. Mark has supported the class and helped us out in tremendous ways. We had guest speakers, Arusha from MarketSmith come. So it's a tremendous class. And I basically, yeah, I feel very lucky and privileged to have gotten the chance to do that. And part of the class is actually a trading simulation. So before we can trade, we actually have to fill out and write our own buy and sell rules, market condition rules, and be basically approved by Dr. Wish before we can trade. So we have to really have an exhaustive list of rules that we have to abide by. And then we have the trading simulation. We learn about how to actually buy and sell. And then the final report, the end of the class, the culmination of everything is a final report where we go through, analyze our trading. What did we do right? What did we do wrong? What are our summary statistics, our batting average, average gain, average loss? and how are we going to change things if we do decide to invest in the future. So an awesome class, and I loved it so much that I was basically a TA and helping out the next 3 semesters. So I took the class 4 times in 2 years, helping teach other people. And yeah, I've always liked teaching. I've done a soccer coaching on the side, so I've always enjoyed that and helping other people learn skills. And I decided to make a YouTube channel to help share what I've learned from that class, from books I've attended, from seminars, from videos like what you put out, and also like the Investing with IBD podcast. I think is fantastic. And yeah, I think the best way to learn for yourself is also to try to teach others. So it's a little bit selfish as well. I know that making the videos every day, every weekend, helps me as well become a better trader and investor. So that's a little bit about why I do it. And in fact, a good friend of mine just texted me the other day that they just started a Roth IRA and they wanted some advice. So it's so cool to be able to share with people my own age who aren't always as knowledgeable about Roth IRAs, financial literacy things. It's so cool to be able to help them out as well. So yeah, that's a little bit about my background and kind of the why I make this content and share on YouTube and Twitter especially.
This is incredible. I can't believe this was a class. It wasn't even a prerequisite. It was a class that you wanted to take at your university. I was thinking back in my days at school where I think the only investing class was like get a newspaper. Is it go up? Did it go down? You had all these guest speakers. What an incredible experience for you to have right up front in college.
Yeah, no, I feel very lucky, and Dr. Wish, as I've said a few times, great speaker. Go ahead and listen to his presentation at the Trailline conference. You'll be blown away. He's been doing it for years and teaching that class for over a decade, and it's a really special class.
Yeah, well, the whole conference was outstanding. I watched the entire thing, a few of the presentations more than once. They did a good, incredible job. You did an incredible job. How did how did all that come together?
Yeah, it was basically, it was an idea we'd had early on in the year to try to do a conference. Yeah, we basically reached out to people we talked to before and worked with and just were friends with if they'd like to do it. And we're lucky with social media to have access to instantly message somebody if you've got a question about stock or whatever. And all the presenters did a fantastic job. But yeah, basically we messaged people, got our speaker lineup, and I was running the overlays in OBS, doing all the streaming things. We had Ray in the background helping out with guest management, having somebody enter while somebody leaves, and graphics people working on the background as well to make sure that everything looks good. So yeah, it was a huge team project, and really happy with how everything turned out. It definitely was a marathon of 2 days, I gotta say. Maybe in the future we'll spread it out over 3 days instead of doing 8 speakers on day one, 8 speakers on day two, because that definitely that was a little long for people. But yeah, the comments and feedback we've gotten about it is fantastic, and everything can be found for free on the Traderline YouTube channel. So go ahead and just in the YouTube search bar type Traderline trading conference, and everything should pop up day one, day two. And now we're uploading each presentation as its own standalone video. So if you don't want to watch the whole 10, 11-hour live stream, you can find each of the videos individually. And yeah, I think it's a tremendous resource and definitely worth checking out.
So after speaking with so many championship level traders, so many great people in the financial education space, so what are some of the commonalities that you've seen among them?
Yeah,
what is top five
sure.
important things?
I don't know if I've got top five. I've got a list here, but I think it's, first of all, the biggest thing that I think all of them share is their optimism and discipline and just passion for investing, trading, whatever their style is. I think in order to get anywhere, you really have to be able to dedicate yourself to trading or investing. And passion, if you're not passionate about this, you're not going to be interested enough to manage those downturns and when you face a little bit of adversity, to be able to push through. So everybody who I met, first of all, they're all super generous people. Everybody who I've had on my podcast, the Market Chat on my channel, as well as at the Trailline conference, are super passionate and super giving and optimistic as well, which I think you have to be to be in the market in the long term. I think another commonality that a lot of them share is just dedication and years really of experience, seat time, as well as studying and developing their own edges. I mean, a lot of the people I've interviewed have started investing and gotten interested in this in the late 90s. So they basically had two and change decades of experience on following the leaders, finding what works for them, what setups work for them, how do different market conditions come into play. So they've put in that time and done the work. And now when the markets are cooperative, they can really push their accounts to the limit and really perform and outperform the market to a huge degree. So I think experience and seat time is just something that comes with it. But I think we as newer traders, we have access to so many resources now that can really speed up our learning curves. Back then, they didn't have YouTube, Twitter, people sharing charts, setups, all of that. So I think we're really privileged to be able to learn from a lot of these people. And there are just so many top traders who are willing to share. So that's definitely one thing. I think a lot of the people who I've interviewed are technical analysis based. You mentioned the U.S. investing champions, Leif and Oliver. They are fantastic technicians here, and they really have studied their patterns that they've followed. They've basically developed their own vocabulary methodology, and they found super powerful patterns that they can just basically use over and over again. And either they basically enter a high potential stock, or they get stopped out with a very small loss to keep that risk management in check. So I think a lot of the best traders I've had are very experienced technicians and are really knowledgeable about how to read charts. The other thing I think is, which is one of the most important thing, I touched on optimism a little bit earlier and discipline. Mindset, I think, is a huge thing. I know you've written a book about it. So I think that's fantastic. I think all of these people have such a strong mindset. They're able to weather the downturns, the corrections, the pullbacks, whatever happens. And they're able to keep the bigger picture in view, know when to get in cash, know when to step back from the market and kind of de-stress. And yeah, they're just super knowledgeable and aware of how their own feelings interplay with trading and when to take a step back if you're over trading, stressing too much. And I think that's super important. Also, a lot of them share a very disciplined weekend and daily routines where they basically set themselves up for success during the week, because they're not going out on Twitter and seeing what this person is posting, saying this stock is up 50% and going out and buying shares. No, they're putting in the work on the weekends, finding those high potential setups and stocks, and know exactly what they're going to buy, when they're going to buy it, what is the setup, how much are they going to risk on any one trade. And that way they're not calling audibles. That's what Mark Minervini calls it. They're not calling audibles during the day. They put in the work themselves to find those great low risk, high reward potential setups. And then they just basically have to execute their plan during the trading day. Yeah. Lastly, I think they're very in tune with market conditions. So Oliver has developed his own methodology based on the 20, a couple different moving averages, and he basically analyzed the market. And if the market's not right, I mean, he's not really going to press it. And they're also very in tune with how the market leaders are performing in the market, which often gives a hint about what the market is going to do next. So I think those are a few things that I've noticed from my interviews with the U.S. investing champions, hedge fund managers, portfolio managers. And yeah, I think there's just a lot of things we can learn from those interviews, which are on my channel as well as at the Traderline conference. So yeah, any follow-up questions on that and kind of what I've learned from doing all those interviews?
Yeah, absolutely. I've got a few of them. So first question, back to what I believe was number 4, when
Sure.
you said that the champs were TA based, technical analysis based. How many setups did each one of them have? Like, are they
Right.
trading like dozens of setups, like a small handful? Is it common? Is it not? Like,
Yeah, great question. So Leif, the U.S. investing champion of 2019, his specialty, and people know him as this, is the high tight flag guy. So he's he's fantastic at basically capitalizing on that one specific setup, which doesn't always occur in the market. There's not always setups like that. So yeah, he's really good at reading that particular chart pattern and really taking full advantage of that. Oliver has a few different setups, and he'll manage a trade differently depending on kind of what setup he's using. And he just released a book that I think is fantastic, Victory in Stock Trading, where he basically outlines his entire strategy. And yeah, definitely worth a read. And he really goes into great detail there. But he also talks about it in, I've got an interview on my channel with him. Jack Alpha Charts has a great interview as well. But yeah, he's super giving with nothing's really a secret. And yeah, both of them really focus on specific things. And I think just a handful of patterns. They're not going out and buying every stock based on any given pattern. Everything has to line up based on their experience and what they're really good at and are knowledgeable about.
Yeah, fantastic. You had mentioned market conditions
Sure.
as well. And so when they're considering market conditions, they're considering market conditions as a whole, as it relates to their system, a blend of both.
So Mark Minervini talks about this a lot. He talks about the goal of the trader is to perform really well when the market conditions are good, when everything's in uptrends, when setups are working and breakouts are happening all over. And then once the tides basically turn, you basically want to go flat. You don't want to decline too much from your peaks. You want to really work hard to keep that equity line pretty much flat. So you want to stair step up. And both Leif and Oliver, I think, follow that same type of strategy. Basically, they're pressing things when their type of setups are working really well, and they're seeing a lot of opportunities and a lot of similar setups that are working. And then once things start to turn and things get extended and the conditions change, they're really scaling back. I know Leif has his own market timing signal, and it'll either be a green or a yellow or a red. And depending on that, he's managing risk differently, he's position sizing differently, and he's just trading a lot smaller when the market conditions aren't right. So I think that's a big key. Press things when things are working, and scale back as a trader when your recent trades haven't worked. The market leaders are breaking key moving averages and falling apart, and the overall indexes are showing a lot of distribution.
Do you think that that's part of the X factor of having a
Yeah.
small handful of setups that you know intimately well, so that way you know when the market condition is right for them, versus having, say, a dozen different setups and you're seeing a bunch of them at different times, and then it kind of leads to confusion?
No, I completely agree. And this is something I've learned over the past year or so. The more you can narrow your focus onto just a select handful of high potential stocks and high potential setups, the better you are at capitalizing on those setups, because you're not distracted by alert going off here, an alert going off here. You're really focused on your plan, your own trading. And I think in the age of social media, we get so much noise every day about this stock breaking out, that I think we really have to ignore. I know Mark Minervini is not on Twitter during the trading day watching what people are posting on Twitter. He's focused on what he's doing, and that's why he's doing incredibly well in the U.S. Investing Championship this year, because he's so focused on his performance and his type of setups only. I think that's really a key. I completely agree.
Yeah, I think he's up something like 200%
Yep,
plus the last he posted. Kind of incredible for only 6 months.
for sure.
Um, I'm curious to hear, well, what are some of your favorite type of setups? Just to veer off
Right.
a little bit.
Yeah. So what I really like is so for time frame, I'm a swing position trader, can slim base, that's my foundation. And what I've really been focused on is as the stock is moving up the right side of an early stage base, so a first or second stage, I like to buy breakouts of tightness. So we call that consolidation pivots at trade lines. So I like to try to get in at some alternate pivots within the right side of a base, and then potentially add on the final breakout. So that's kind of my go-to. And then as well, when a stock forms a little bit of a shelf, whether it's a 3 weeks tight after it's broken out of the base, it's a pullback on low relative volume to the 21 EMA, the 50 SMA. I'll look to add as it confirms off that potential area of support. So yeah, just moving up the right side of the base, I like to try to accumulate a high potential stock in my view. And I also like to look at IPO bases. I think those are big ones. And I just did an interview with Greg Morton that will be coming out this week on my channel. And yeah, he's done a ton of research there and shown the high potential of IPO bases. So that's going to be a new area of focus for me.
Oh, that's interesting. I'm curious to hear too, when you're learning something new, like this new type of setup, how much time do you give yourself to learn that one thing, focus on that one thing?
Yeah, that's a great question. Obviously, you don't go ahead and put your full account in the next IPO base breakout. That's not the way to go. You got to tiptoe into it and really do your homework. And there's a ton of resources out there. The Trailline model books have a ton of base breakouts. So when I learn something new, when Ray or Ross, who I work with at Trailline, mentions something, I go back and look at some model books, look at some previous examples. If I know a stock like Google had the textbook IPO base, I'll go back and study that and see what it looked like in real time, both in terms of price and volume, and kind of go bar by bar and see how I personally would have traded it. And then based on feedback from that kind of that practice, I might change my rules and tweak how I would approach something. And in terms of IPO bases, there's also a great resource, The Life Cycle Trade by Yves Bobach and Kathy Donnelly, as well as Eric Kroll, and the other authors. And they did a fantastic job breaking down the statistics that come with IPO bases and different rule sets as well to trade them. So yeah, I think once you hear about something, look out for resources available on YouTube, book format, and yeah, just do a lot of practice before obviously diving all the way in. You never want to do that on a new setup. And obviously, to manage risk, you never want to be completely in one stock if that's not your style. So yeah, I think with anything new, take a little bit of time and do some practice before really applying it to the majority of your capital, I would say.
Yeah, for sure. Couldn't agree more with that statement. Well, in the seven things that you mentioned, I jotted down seven. It could be maybe one or two more if you break it out in there. But of what you mentioned, I think I would say that five of them are mindset related, right?
Yeah.
Like optimism, generosity, experience, like mindset in itself, discipline, like all that falls into the category of what I would consider mindset. I'm you had mentioned at the beginning that you're very fortunate to have kind of started off with Dr. Wish and geez, like I think back to my own financial education. Like I similar to Melissa, I did not learn anything like that in school. Most of the stuff I ended up learning on my own, and then eventually finding IBD and IBD meetups, and that was a great experience. But I'm curious to hear from you for those of us that want to begin to adopt a better mindset and everything that you've shared with us. Well, what are some of the ways that you think would be great for people to go about doing so? YouTube channel, of course. Well, what are some other ways that people could start to immerse and get themselves around and build their environment to foster a great mindset?
Yeah, it's tough. There's some great books, Trading in the Zone. I'm sure you're familiar with that. Yeah, the mindset is a tough one because not many people seem to talk about that too much. I've seen in some interviews, Joe Fahmy, who I've had on my channel, talked about it a lot. And it's a really important thing, but it's not often talked about it. How I kind of approach things is everything is kind of a learning experience. So I really enjoy learning. I've been a student. I love learning new things, sports especially. I just learned axe throwing last week, so that was a lot of fun.
Axe throwing?
Axe throwing, yeah.
Oh my God, we got to talk about
That's
that.
awesome.
Yeah, sure. But when something happens and and something doesn't go your way, you have to take a step back and realize where you are kind of in the learning process and take everything as a learning experience if it doesn't go your way. I mean, when I was axe throwing the first I don't know 100 throws, they didn't stick in the boards. They bounced off and yeah, it didn't go the way I figured I'd just be able to do it first time, right? But instead, you have to realize kind of what you're doing wrong. Are you not throwing it straight? Are you over rotating? Should you take a step back, step forward? So instead of saying I should be a great trader right away, I think an important thing is to take a step back, realize that it's going to take some time. It's going to take some time to just learn the basics, the vocabulary. What is a chart? How to use a chart? I mean, people spend their whole lives tuning their technical analysis and their process, which I think is the perfect way to go. So I think with everything that happens, if you suffer a bad trade, like I got stuck in Fastly for I just lost a lot of profits. I didn't suffer a huge loss, but I gave back a lot of profits last year on Fastly on one of those gap downs. And you just have to take everything as a learning experience. What did you do right? What did you do wrong? And how can you tweak your rules to basically do a little bit better next time and slowly basically incremental progress and just slowly get better over and over time. And eventually, I mean, you will get to that level. You'll always be learning, but you'll get to a level and just continuously improve and get better with every market cycle. So I think approach everything as a student, approach failures as learning experiences. I think that's the best way to go.
You said something very interesting in there too, and it's related to the learning experience, and I think the amount of time that it takes to achieve incredible success.
Yeah.
And watching the people on your channel and while watching other people on social media, it's so easy to see the highlight reel of the 100% annual returns, 200%, 1,000%, like Oliver. How long or what was the shortest period of any of the guests that you've spoken to achieve that level of success?
Right. I think that's a good question. I don't have a definitive answer for you, but all of them have really spent like years doing this and fine tune their craft at the very least. I don't think trading is something you can come in and in 1 month you can become a master at it. I think it does really take some time. And yeah, I don't have a great answer for you, but I think just the long and short of it is that yeah, it takes time, it takes practice, and the more you dedicate yourself and basically approach every failure, every loss as a learning experience, I think the faster it can go. But everybody who I've interviewed has really mentioned about how they still make mistakes all the time. Just at their level, they know when they made a mistake very quickly and they rectify it as quickly as possible. So I think that's a big key as well. You're going to make mistakes throughout your trading career. Nobody is perfect, but the quicker you can recognize that you have made a mistake, the quicker you can rectify it and hopefully lose as little capital in the process as possible.
Yeah, I think so many people, so many new traders come to this game and they think that, yeah, I want to make 100% annual returns too, and think that it's going to happen over a couple of months that they'll get to that level.
Yeah.
Just, like
it's unrealistic.
Yeah, no, not at all. So out of all the people that you've interviewed, that none of them have done it in a couple of months.
No, for sure.
It's all been several years. Same thing for me as well.
It's sad. I think, Richard, you mentioned this earlier in the interview that a lot of people, especially younger people, come out of college. They see these things on Instagram and they see the, with the Lamborghinis and all these, big mansions and everything. And they think, oh, this is a make money quick scheme, or they think that they can make money quick doing this. And I think that it's a shame that a lot of them probably do lose early on, and then they probably give up because they just, it wasn't what they expected.
Yeah, I agree. And yeah, I think social media, there's a lot of great things with social media, Twitter, Instagram, all of that. There's a lot of incredible resources and people who approach it the right way and talk about risk and managing risk first and foremost. But there's a lot of people just showing, oh, I made $10,000 today. You can do this too if you just buy my course right here. People have to recognize that one, it's percentage, it's not dollars. So $10,000 for one person can be a 0.2% gain on a day. So it doesn't matter. That doesn't help you in any way. Seeing and feeling bad that somebody made $10,000 in a day, because everything that matters is your account and how you perform. So focusing on yourself is a little bit better way to approach it. But I think people have to recognize that it's going to take a lot of work, and there are a lot of incredible courses that provide a good good kind of learning experience and shorten your learning curve for sure. But there are a lot of people out there who are just kind of posting I don't know, posting P&L doesn't really help anybody in my view. It's just kind of, it's a lot of ego. It's not a lot of helpful. I like people who share process over just kind of results, talk about your daily routine. How did you get that incredible daily return? Not just boasting about your daily return,
And I think that's why you've blown up so much in the past 2 years. Like, you're just giving out pure value, like from everything that you've learned, having incredible guests. Like, really, it's inspiring.
Oh, thanks. Yeah, I try hard. Yeah, I like the long form interviews too, because YouTube and social media in general is historically kind of very short time span, and TikToks you swipe after zero point 0.2 seconds looking at it. But yeah, the interviews I do is more hour and a half length, and we really dive deep into people's process, mindset, background, the failures they did early on, and how they changed things. So yeah, I hope to kind of counteract a little bit of that, and hopefully help people shorten their learning curves that way.
Would you mind sharing a little bit of your own process with us?
Sure. What would you like to know?
So you had mentioned weekend routine, and that
Sure.
being an important part for pretty much every champion that you've interviewed. Well, what's your weekend routine like?
Sure. So no, that's a great question. So I post 2 weekend videos on my channel, my stock market outlook video and my weekly watch list video. And those 2 videos are basically the culmination of my homework for the weekend. So I'm just kind of sharing my process. Everything starts for me with keeping track of the market leaders of the current day. So this doesn't happen only on the weekend. I kind of add stocks to the list during the week if they break out of sound bases and are acting strong. But that list, the first thing I do each weekend is go through that list. How did each one perform that week? Are they acting well? Are they pulling back on below average volume? If they are pulling back, are they holding above key moving averages that I use? And basically getting a sense of how the leading stocks in the market are doing. Then I also go ahead and take a look at the market indexes and basically look at the same thing. Are they showing signs of distribution, accumulation? Are they trending above key moving averages? Are they breaking out of sound bases, or are they doing the opposite? Do they look like they're kind of rolling over? Are they super extended from a base breakout? So everything starts for me with that kind of market outlook and get a general sense of the market conditions. I also look about how my recent trades have done. And have I been stopped out of the past 3 trades? Well, that gives me information that maybe I should take a step back, lower my position size, and relax a bit, because maybe the market just isn't working right now for my particular style, my setups that I prefer. And after I've determined basically the market conditions that way, I go through, analyze my focus list from the previous week, that my setups that I determined, and go through and talk about, how I would have basically entered this if I didn't enter it, or if I did, I talk about that as well. And then I go through sentiment, the IBD Big Picture article, which is a great resource for a quick recap basically of the week's action. And then I end everything with the GMI signal, which is basically from Dr. Wish. He has his own proprietary 6 conditions that basically he uses to analyze the health of the market. So if it's a 6 out of 6, the GMI score, that's a pretty good, healthy market that's trending nicely. Breakouts are working. But if it's a 2 out of 6, 1 out of 6 for 2 straight days, that overall GMI signal might switch from green to red. So that's kind of my market outlook video. Then for my weekly watch list, which is the second part of my weekend routine, I basically have my scans in MarketSmith that I come up with about a list of 400, 500 charts. And then I take that from MarketSmith and paste that into TC2000, go through setups, just pan through pretty quickly and flag any ones that I think are a little bit interesting. And I maybe they're potential market leaders, they're trending nicely, and I'll flag those. Or if they're potentially set up for next week, I'll also flag those and take that 500, 400 stock charts and summarize it and put it into a separate watch list called my focus list. Well, actually, my universe list. That's about 100 names. Then in those 100 names, I go through each of those in MarketSmith, looking at the fundamentals, technicals, all of that, and come up with around 15 names that is my focus list for the next week. So that this way, I basically stay in tune with the market conditions by going through all those leaders, the market, as well as just going through those 500 charts, because that really gives you a great sense of how the market is doing. And then I also have my setups ready for the next week, basically with potential buy points, pivot points. I know how much I'll risk on any given trade, all of that really important stuff. So that's kind of the routine I've developed, and I'm always kind of tweaking it, adding stuff once I interview somebody and he mentions something really great, and yeah, basically incorporating it into my own process.
And that's fantastic. Process is very similar. But I'm curious to hear, when does a leader stop being a leader,
Right.
by your definition?
Yeah, that's a great question. So I operate kind of base to base a little bit. That's kind of my time frame. So what that means is a stock will move up, break out from base, and then at some point it will break the key moving averages and start building a base. Depending on your time frame,
Averages that you're looking at again are, well, which ones?
Yeah, so I mostly look at the 10-day simple, the 21-day exponential, and the 50-day simple and the 200-day simple. So base to base stuff will trend around the 10 and 21 really. And then when it starts to form a new base, it'll pull back all the way to the 50, maybe even undercut that, and then it might set up again. But for me, I like to operate the in between the bases trend. So I'm usually getting out when the stock breaks the 21 exponential moving average on volume. And depending on your time frame, you might want to hold through that second base. If you've got a nice cushion, that's just not kind of my area of expertise, my focus. So for me, if a stock sets back up another base, especially if it's still early stage, it can still 100% be a leader. It just has formed a base, and often the overall market was correcting at the time as well. So for a former leader to not lead anymore, it has to seriously break moving averages like the 50-day simple on large distributed volume, and yeah, that's the basic thing. It has to pull back hard enough on large enough distribution, basically to make the chart look broken, and especially gap downs that really nullifies a chart for me.
Very interesting. All right. I want to make sure that everybody has the opportunity to ask questions too. So everybody that's here live, if you haven't typed anything into the chat yet, like, please go ahead and do so now. While we're waiting for other questions to come in, before we went live, you started to show us a little bit of something in TC 2000.
Yeah, do you want me to bring up a chart?
Yeah. Let's see. Because the market's kind of in a precarious spot right now. Curious to hear what some of your thoughts are.
Sure.
On what we're seeing.
This
weekend,
what's
this? We've got DocuSign.
Yeah, this is DocuSign. So this is a current leader in my view. It pulled back nicely to the 21 exponential and had some setups here, 2-2 reversal through this high that you could have capitalized on, and then obviously you've got some add points here. But in general, this weekend I basically shifted to uptrend under pressure along with IBD, and this is because the indexes were pulling back pretty hard. Former leaders were showing some distribution, and this didn't look good. This picture, this is where Friday ended. We were breaking the 21 EMA, which is a little bit of a line of the sand. First time we had done that since breaking out of the space and moving up the right-hand side. And then we had a gap down, and this is where some potential leaders kind of decoupled from the indexes, and many actually had very strong days here off the open, and some even went red to green. So this is the first kind of supportive action here. And then we had really nice fall through today. So uptrend under pressure this weekend, maybe shifting back to up confirmed uptrend in my view here. but everything remains to be seen. We're still very early, and this could just be a little bit of an oversold bounce. This close looks pretty promising so far, so we'll see how everything changes. But overall, let me open up this right here. I've got my potential leadership list. So this is also, I track this intraday, and you guys can see this okay, right? Everything looks good?
Yeah, I see a potential new leadership
Yeah,
section that you're scrolling
right.
through.
Right. So this is my list, my running list of leaders, and I can just quickly see, are most of them green on the day, red on the day? How's the volume? So today, most of them are green on the day, showing nice fall through from yesterday, but there's not too much volume coming in. So it's kind of I always go like price is the most important thing, but you want to see volume kind of adds emphasis and conviction to whatever's going on with the price. So right now, some of them are bouncing nicely, but maybe on a little bit lower volume. So we might have to go sideways before they really break out. But really supportive action, like for instance, ASAN, this has been a leader, super strong breakout here. First pullback to 21 EMA, you can notice that the volume is below average, below even the 10-day. I was looking at a weekly. So usually I have a 50-day here or even a 20-day moving average on volume. So this pullback, this sideways move is kind of a drift back into the 21 EMA on lower volume. And then we have a really strong bar here finishing at the high and going through this low. So potential oops reversal day triggering through this low and then nice fall through today. So this is acting well. A lot of the leaders acted well. Nice upside reversal bars yesterday and fall through today. But the volume is a little bit low. So it remains to be seen really. But I'm basically, my mind has shifted a little bit from uptrend under pressure back to confirmed uptrend. And I think things aren't looking as bleak as they did on Friday for sure, is my view. And the largest leader that broke down last week was NVIDIA, which declined on 3 days of pretty high volume. But once again, it's been supported nicely off the 10-week area. If we go to a weekly chart here, this is a bounce off the 10-week, the first pullback to the 10-week after the breakout. And now we've got an inside day with a pretty good closing range on this day on Tuesday. So things look pretty good, honestly, and we'll see basically how everything ends out the week.
Yeah, very interesting.
And DocuSign today, along with Domo, I think have had breakouts to all-time highs. So that looks pretty strong. And let's bring up Domo as well. Nice breakout as well. Both of those were on my focus list this week. So we'll see how those end up.
All right.
Yeah. Any questions about what I've just kind of covered or anything in the chat as well? Happy to answer anything.
I have a question for you, Richard. So
Sure.
after graduating from, I know you were going for engineering, like what actually made you realize that this is what you wanted to do and that you wanted to help teach? Like what was like that switch for you to make that big change?
Yeah, it's a big change. I think I was doing this part-time throughout the later years of college, and I was super passionate, always looked forward to making videos, and this to me didn't feel like work at all. And so I think if you can find something that makes you feel that way, you should pursue that to your fullest potential. And then Traderline has been a great opportunity for me, a great group of guys. I'm learning so much from Ross and Ray, fantastic traders in their own right, and being able to kind of help teach everybody. I think that's just a really rewarding thing. And I know I would have liked somebody to reach out and help out to me and like Dr. Wish did and help me kind of shorten my learning curve. So that's what I'm really trying to do for other people now.
Okay, great. We just had a question in from Dustin. He asked, did you add any positions today?
I did not. I've been pretty busy making videos today, so I haven't gotten the chance too much. But yesterday on the oops reversal, that was the prime setup for me on a couple of these names.
I'm curious. Well, what's your average stop loss?
My average stop loss is about my average loss is about 3.5%. My average stop loss is usually at the low of the day when I enter a position. So I like to have that max 5%, but max 5%, as little as possible, ideally. And on some of these oops reversals like we had on Domo yesterday, I didn't enter this one, but if you entered there, you've got about 1.5% stop at the low of the day. So that's a pretty good risk reward setup when a stock has just kind of gone sideways when the overall market has pulled back pretty hard.
I love that name, the oops reversal.
Oops reversal. Yeah, that's not my setup. I've learned that from Ticker Monkey, and I don't think even they developed. I think somebody else invented that. But basically, it's when you've got a gap down below the prior day's low, and then you have a quick move back up through that low. That's what an oops reversal is. And often when we've declined for a few days and then have an oops reversal, that's a pretty good low risk, high reward setup within the context of an overall strong chart pattern like we had with Domo.
So what's the entry on the oops reversal?
It is right through this low.
So when it gaps down and then when it reclaims the prior day's low, that's the entry point.
Yep. And if you even want to go into an intraday chart to basically a 15-minute chart, you could use kind of an opening range breakout that should trigger pretty close to that low as well. So there's so many different ways to do it. But yeah, on a daily chart, the point is the low. That's when you want to get in as close to that as possible. And I like it when you've only got kind of a 1-2% risk. If it's already come up 8%, 9%, it's a little bit short-term extended on the day. So really you want to use an intraday setup if you're going to play that on that type of setup.
Got it.
And I mean, this was all over yesterday. I mean, Net had one. This risk was 1-2%. I mean, if you just go down this list, a lot of stocks gapped down yesterday and then had really strong moves off the open. Shopify had one through this low here. Nvidia did as well. So here, if your entry is here, I mean, even though it's pulled back today, it never touched your cost. So it's a pretty good low risk, high reward setup, especially with the confluence of it being the first pullback to the 10-week moving average. I always like using these kind of tactics within the context of a really strong stock in a decent market, and with of course those cancel characteristics, high earnings, sales, all of that.
One of the questions just asked, do you have a trigger alert for that in the program you're using, the TC 2000?
I don't have a trigger alert, but I'll be setting. So what I'll do, let me move the Zoom screen just a little bit, is before the open, I'll set alerts just below this low. So I can set alert right in TC 2000, and basically it will notify me with a alert notification when it goes to that low. And of course, I'll have my focus list of names I'm watching pretty closely here. And within this column setup, I've basically got a column setup that shows me when oops reversals have happened. So there's none today in this focus list. Let's see if there's any here. It looks like there's one today. Let's go ahead to that one. So these might not be great setups because this is just my overall universe list of 300 names, but we've got Riot, which had an oops reversal gap down, then moved all the way back up through that low. So that's why there's an arrow here or a check mark here. But the columns and everything in TC2000 are super useful. I'm a coder as well, so I really get a kick out of making these, especially if they help my process.
All right, we have a question from Brendan. He says, in regards to mindset, let's say you have a bad run and things just aren't going your way. How long until you take a step back, and for how long would you take a break for? Is that when you do the axe throwing?
Yeah, axe throwing, good way to de-stress for sure. I think I would start scaling back a little bit if three out of my last 5 trades have hit my stop and we're seeing distribution in the market. That confluence of stuff would take me to say, hey, the market's not quite right. Setups aren't following through how I like it. Time to scale back and just put on kind of test trades if that happens. And yeah, if you've experienced a few bad trades in a row, go ahead and do something outside that you enjoy, whether it's running, soccer, basketball, baseball, whatever. Go do something away from the markets and get your mind right before coming back and focusing on this. I think that's really important.
To follow on that one, how many trades do you typically have open at any one time?
Right. So my usual a full position for me is usually 10 to 15%. Well, my max could be 18%. So usually I have about um, 8 to 10 names on at any given time. Six to 10 names at any given time. Yeah.
6 to 10.
Yeah.
So if half of the names get stopped out, then that means that you're moving to a smaller size.
Yeah, that's correct. And
Okay.
yeah, and my first buy might not always be a full position. I might not go to a full position right away, depending on how the market environment is. If my recent trades have done well, I'll go to that full position. But if the market's kind of iffy and my recent trades haven't worked, I'll start with a quarter position, half position. Just you don't have to push it when things aren't going well for you. You can always scale back.
Yeah, that's a great point.
Julio asked, he's not sure if you answered this already, but do you ever short any stocks? If not, do or are you just out of the market on the downtrends?
Yeah, so I don't do any shorting. It's not really my game. Most of the time, the market's in a nice uptrend, and as an optimist, I like to be focusing on going long stocks. I think there's incredible opportunity in shorting. It's just not really my focus. And yeah, I'd rather be in cash when the market isn't great, especially if we're in a downtrend like in during this period here. I'm in cash, especially as the market starts trending below a declining 21 and 50 SMA. That's a point where I'm usually fully in cash and just keeping a list every day of stocks that are trying to kind of fight the overall market downtrend and could be the potential leaders in the next uptrend.
You remind me of Jim.
Yep, yep. Well, I've learned a lot from Jim Ropel. He's a great dude for sure.
Absolutely.
Okay, looks like we have 2 questions from Iago. The first one he asks is, do you use any fundamentalist indicators in the analysis? And he also asked if you could talk a little bit about how your positions behaved in the 2020 crash.
Sure. So for fundamentals, I'm looking for the can slim characteristics, really strong quarterly earnings reports, annual estimates. If those are up or over 100%, that's ideal. I'm looking for great return equity over 17, 18%. I'm looking for margins being strong. Over on the right side of MarketSmith, I always look for increasing institutional sponsorship and 2 or 3 high quality funds based on their criteria. That's a bonus as well. So really, I follow the can slim characteristics for my fundamentals. As for the 2020 correction, I don't quite remember what I had, but basically all of them started acting well and acting badly and breaking key moving averages on volume. I think I had DocuSign there and Nvidia, I think, and they weren't acting well, and I basically got stopped out from my raise stop. So I was out pretty much for most of my positions on this day, and I think I had one left on this day, got taken out. So I did fall back quite a bit from my all-time highs, but I protected myself during this downtrend and got back in close to the fall through day on the uptrend. So yeah, that's kind of what we're taught in the cancel methodology is you're not going to get the high, you're not going to get the low, but if you can get the majority of the uptrend and get out of the majority of the downtrend, you can do very, very well and protect your overall portfolio during those very volatile periods where just there's a lot of emotion in this charts. There's no real bid, there's no support from institutions, but once things start to turn around and stocks start setting up within bases, that's when you want to start trying things and buy the leaders breaking out to all-time highs when the market is still 20%, 18% off its highs.
Okay, Mike, I'm going to hand it back to you.
All right, Richard, having learned and continuing to study so much, again, it's super inspiring what you're doing. I'm curious to hear what are 1 or 2 big things that you've seen improve in yourself and in your trading over the past 12 months.
I think stay out power a little bit.
Stay out power.
Yeah,
Can you
stay out
talk
power.
that?
Yeah, sure. So I mean, during this entire period where we were just chopping around a lot. I mean, there wasn't much working. A lot of growth stocks that had been the leaders were pulling back hard, making 5-6 month bases. And the best thing I did there was getting out early and following my rules. And I did try and get chopped up a little bit on smaller than average positions, but for the most part, I did pretty well at limiting my damage during this period. The second thing over this 12 months, I think, is something I learned from Jim Ropel, which is really focusing on the leaders and focusing on the highest potential stocks with the greatest earnings, sales, margins, all of that, the greatest story, and in combination with the greatest chart pattern presented. So yeah, I think those are two important things I've learned. I'm still learning them. I'm still working on them for sure. But those are two really important things that I've been working on personally this year and the past 12 months or so.
That's incredible. Richard, I don't want to take up too much of your time, but tell us where is some of the best spots to find you? I'm sure that for the 2 or 3 people that are watching that don't know where to find you yet, where are some of the best spots to find you?
Sure. So I'm very active on Twitter. You can find me at Richard Moglen, and Moglen is spelled Moglen. You can find me there. Just search me in the bar there. I'm also super active on YouTube. You can once again search my name, Richard Moglen, and also go ahead and check out the Traderline channel. I post videos there as well, in collaboration with Ross Haber, former William O'Neill portfolio manager, Ray, fantastic swing trader as well, who's killing it this year. So yeah, my channel on YouTube, the Traderline channel, as well as my Twitter is probably the best place to interact with me. And I welcome any questions you have. I'll try to answer it to the best of my ability, or find somebody else, somebody I know who can answer it as well. So yeah, go ahead and check me out, and yeah, hope it helps your process.
Absolutely. Are there any other closing thoughts for somebody that's new, getting started? Well, what bit of advice do you have for those people?
That's a great question. I always ask that as well. For closing remarks, I would say I'm just going to echo Jim Ropel is be optimistic, always be working hard, be ready for whatever can happen. And there's always going to be new and innovative companies coming out every year with the potential to change the world and also appreciate dramatically in price. So keep an eye on those emerging leaders and try to capitalize them as much as possible. And yeah, the last thing I would say is have a written rule set down of buy and sell rules, because I think that's the first step to being prepared in the market and approaching this as a professional and as a business, instead of really an amateur. Have a written set of buy and sell rules, and then every weekend do that routine, put in the work, and basically set up your buys and sells in advance if stocks set up like you want them to. So yeah, I think that's how it ended.
Richard, I really appreciate you taking the time to be with us today. Everybody that's here, thank you for joining us, and look forward to staying in touch.
Yeah, for sure. And thank you and Melissa for having me on it. It's been fun.
Thank you so much, Richard. Keep inspiring, keep teaching, and I'm wishing you much success with all you do in the future.
Awesome. Thank you, guys.
Take care, Richard. Take care, everybody.
Bye.